What is going on, everybody? It's your boy from Scorpion Trading, back with another market analysis video. Just a quick little disclaimer. I want to say that I am not a financial advisor and that everything I'm about to say is purely my own speculation, and you should do your own due diligence and consult with your own financial advisor before you just take advice. So yeah, let's get into it. So when we look at SPY, we had the high of the day at 437 during pre-market, and we opened at 436.16 and experienced a sharp sell-off all the way down to the mid 435s, and then it was consolidating and broke down up until 10 a.m., and that was right about the low of the day if you look. And ever since then it was just choppy trading all day. And you may be wondering, why was it? Well, if you look here, today we had at 7 a.m. or 10 a.m. Eastern time, we had Federal Chairman Jerome Powell testimony in front of the Senate, and the Senate was asking him questions. And if you watch the live stream, you would have got a little bit of intel into it as to what they were talking about. And pretty much what they're talking about was just the bank lending standard and how they were giving Jerome Powell props for pausing interest rates on the last FOMC meeting. And if you look, that should have been a good thing, but the market was still going down and experiencing sell-offs, which they were they were having a good discussion right in the beginning. That's why you saw this uptrend. But then it was getting like they kept arguing and talking over each other, and that's when you started seeing these sell-off periods, and they were just, honestly, it's that's how these meetings go. It's really volatile and choppy trading during these meetings with government officials. And that's why it's important to always know what's going on. Like, for instance, tomorrow on Thursday, we have Jerome Powell speaking again at 10 p.m. Or 10 a.m. Eastern time. Sorry about that. And if you also look, we have Bowman speaking right 5 minutes before Jerome Powell speaks. And we have the initial jobless claims. We want this to be below or around the consensus. We don't want it to be higher or too below, because then that's going to be bad, and the Federal Reserve will have to raise interest rates in turn because of that. So we're going to want to see this stay low, along with we're also going to want to see these jobless claims and all this stay where the consensus is in the forecast, because if we see a big move up or a big move down within these, expect the market to not like it, and we'll see a really big sell off, or the opposite could happen. We could see a really big uptrend. But in my personal opinion, I'm favoring the bulls. And I'm thinking by the end of this week, we're going to be at 440, but Thursday, we're going to see a small pullback because we have Jerome Powell and all these Federal Reserve people speaking. So let's go over the market analysis and what the chart's telling us. So if we look, we have key support at 435 per share. And usually if we break below this, it tends to drop a bunch, but then when we break above it, it likes to stay above it. It doesn't go below it. So you want to be aware of that. If we open tomorrow on Thursday below 435 per share, then more than likely we're going to see it come down when Jerome Powell has his meeting. And if it opens above and there's good news, then we're going to see it go up. But in my opinion, I personally think tomorrow, Thursday, we're going to see a downtrend in the market. We have key support at 434 per share. If you look on the 5-day chart, it hasn't really been breaking below its EMA. So if you look by today, it reached its high of the day during pre-market, and it reached all-time low in after hours. What is that telling us? Well, tomorrow we're more than likely going to see it be down, because if you look, we couldn't manage to break the high of the day during pre-market in normal trading hours, which typically isn't a good sign. So be on the lookout for that. Um, if you look here, sorry about that. We have on Friday we have 600,000 out of the money puts expiring and only 118,000 in the money, and we have 242,000 out of the money calls for Friday. So what this is telling us is likely that on Friday we're going to see the market makers try to squeeze these puts and try to make the market go up to around this max pain price, because they're going to want to get all these out of the money puts to nothing to become worthless. And yeah, so just be on the lookout for that. Don't be scared, but keep up with the news and play it smart. So if we look here, we have a lot more puts in general than we do calls, and that's that's a good thing for us if we know this, because what's that going to tell us? That the market is likely going to go up after we see these like this cool off period. The market's going to likely, because it makes new highs and lower lows, higher highs, lower lows. So we're seeing it make a lower low right now, but then we're going to see it make a higher high, because if we look on the on average this chart, we've been on an uptrend. We're in a bull market right now. So there's nothing wrong with a little bit of pullback and a little bit of cooling off, like what's happening right now. There's nothing wrong with it. So yeah, so just be on the lookout for those key support levels. Again, if SPY opens above 435, be on the lookout for this breakout to up here at 436.2. And if it opens below, be on the lookout for it to break to 434, and then more potential down run after it reaches 434. But if it opens above and reaches 436.2, it's likely going to see more uptrend. So yeah, just be on the lookout for both of those. I hope you guys have a great rest of the week, and like and subscribe if you found this helpful. And yeah, hope you guys have a great one.